heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Tighter chip controls. Bloomberg reports the US is reviewing caps on AI chip sales to the Middle East from companies like Nvidia. Meanwhile, Dell says it's ready to ship servers with Nvidia's Blackwell AI accelerators, a sign production of the chips back on track. We speak to a key executive. And days after Tesla wowed crowds with its Optimus AI robots, we now know they were remotely operated by humans after all. We start with news that could have a major impact. US AI chip manufacturers, including Nvidia. Sources tell Bloomberg News that the Biden administration and officials have discussed capping sales of advanced AI chips to certain countries. The sources add officials are specifically focused on Persian Gulf countries that have shown a growing interest in AI data centers. Looking at the markets, these are the names that are impacted: Nvidia, AMD, Intel. It's worth noting in that reaction that a part of the declines that, if you're just joining us, have accelerated in the last 30 minutes is a really ugly earnings print from ASML, which we'll get to momentarily. Bloomberg's Ian King joins us in San Francisco. Okay, so the US is looking at some of these Middle East nations because we know they're throwing a lot of money behind AI. Previously, US officials were looking at China and capping export of AI chips to them. What do we know about this latest initiative about blocking access to the accelerators?
Yeah, I mean, this is obviously the key choke point, the one thing that Washington can do to really control what happens, who gets what capabilities. The concern is, as you said, about China, but what will the Middle East do in terms of allowing access to these capabilities to China on a remote basis? All kinds of considerations, all kinds of concerns. We've used export controls up until now. Now we're looking at perhaps a more broader blanket approach.
For our audience on Bloomberg Technology, sometimes they struggle to understand what it is the US is trying to prevent. An AI accelerator is a high-performance chip, and it goes into a data center. How is it that any government can say to a company, okay, we cannot allow you to sell your best thing to any market? That's basically what they're trying to do, right?
That's exactly it. It's trying to basically place a cap on the capabilities of a country or a company and stopping them from having the ability to develop an advanced AI model, which, as we know, can have all kinds of capabilities. And once it's out there in the wild, who knows what happens with it?
Okay, let's get to the breaking news of the last 30 minutes. ASML, which is Europe's most valuable company, but also a leading maker of chip making equipment, has given us earnings and a pretty ugly forecast. It has cut its gross bookings outlook for fiscal 25 to a much more narrow range. And as we can see on the screen, its shares have reacted very negatively. What do we learn through that metric?
Yeah, I mean, bookings are really the way that a company says, hey, this is roughly what our revenue is going to be at this given point. It's a lead indicator. These machines, as we know, are absolutely enormous. They take a long time to make. So it's very much a leading indicator of demand for the whole of the industry.
Let's look at some of the other names that are impacted. So ASML makes the machines which manufacture the chips. Yep. It doesn't make the chips themselves. Why is it then that names like Nvidia and AMD, Intel saw their own declines accelerate? What is it that we're learning about the sector as a whole?
A couple of things here. One might be more ASML specific, but in general, chip equipment is a leading indicator. You buy equipment, particularly ASML's, way ahead of time, thinking about what you're going to be doing this time next year. But ASML's, look at their customer base. Basically, they have 3 customers. 2 of those customers, Samsung and Intel right now, are in cutback mode. They're in trouble mode.
There is a link between the first story we covered and ASML, which is the United States, along with allies, has also looked at the mechanism of controls on chip making equipment, and ASML has been at the center of that. in the context of extreme ultraviolet lithography.
Yeah.
Please take it from there and just explain why these machines are so critical and why governments want to control them.
Yeah, I mean, you've got a production line, lots of different machines made by lots of different companies, Applied Materials here, KLA Tencor here, Tokyo Electron, but the keystone piece of equipment is ASML. If you want to make an advanced chip, you need their EUV machine, and they're not allowed to export those to China because at least Washington doesn't want China to have that capability.
And interesting in all of this, and I kind of mentioned it a moment ago, this is Europe's most valuable company. They are a Dutch company, but with a footprint here in Silicon Valley, customers here in America. Where are they doing business principally? Where are their biggest customers?
For everything advanced, I mean, they have basically 60% of their revenue comes from Intel, Samsung, and more importantly, TSMC. So all over the world, wherever these factories are, but really concentrated in these companies that want to make the world's most advanced chips.
Bloomberg's Ian King, who leads semiconductor coverage at Bloomberg. Thank you very much. Now, earlier today, the U.S. Department of Justice Deputy Attorney General Hetal Doshi spoke exclusively on Bloomberg's The Opening Trade and said this about the importance of competition.
I think that history has shown us that the considered judgment of regulatory bodies and legislative bodies across the world has really been that competition fuels entrepreneurship and innovation in a way unlike anything else. And that's why competition, rather than consolidation or concentration of power, is prized in both regulatory and enforcement schemes across the world.
Okay, those are the top news items in tech today. Let's bring in Lisa Erickson, head of public markets group at US Bank, $480 billion in assets under management. Let's get the investor analysis. Two pieces of semiconductor industry news, right? Bloomberg reporting that the US is looking at export controls of AI chips to the Middle East, and then ASML cutting its gross bookings outlook. What is your assessment of where you want to treat the chip industry right now? Because for so long, it has been the centerpiece, I think, for a lot of investors' attitude, at least, towards the technology sector, Lisa.
Well, certainly what's going on in the chip industry and in technology in general is key for the U.S. stock market, simply because it is such a large weight and an influence not only on the capitalization and its price performance, but also in terms of a large share of the earnings drivers of what's going on in the S&P 500. So we do view any guidance and forward outlook coming out of the third quarter earnings seasons from the technology industry as a whole, including chips, as certainly one thing to keep an eye on. We are encouraged, even though we're very early in the earnings season, by initial reports of continued CapEx spend, both on technology in general as well as for AI-related products. But again, as these earning reports continue to come out, we'll want to monitor for further impact.
You know, the reporting on the export controls to the Middle East, it states quite clearly this is the Biden administration thinking about it. And in November, we have an election where the administration might change. I will not ask you to comment on that reporting, but there must be an element where investors have to factor in the election as one factor or one risk in their approach to markets. How do you approach that, Lisa?
Well, the election certainly is a toss-up with the polls and the prediction market so close. And to your point, whatever policy comes out of the election, whether it's in the presidential race or in both houses of Congress, can make an impact on, again, how the economy is impacted by regulation and other issues. So we are monitoring that very closely. Obviously, right now, there are some different views on where regulation may head, and so we just need to see what the outcome is as we move forward into these next few weeks.
I guess calendar fourth quarter or the month of October for earnings will be really interesting. Do you think that we'll find ourselves in the context of big tech, the Mag 7, in rude health? Or are you kind of expecting to go into this earnings season braced for some signs of things tapering off, at least in the context of this U.S. economy?
Well, certainly if you look at the expectations for third quarter earnings compared to 2Q, investors actually have already adjusted for the fact that the economy and also corporate profitability and revenues are slowing. So just as an example, in the second quarter, we came in on the S&P 500 in earnings at about 11%, and they're only expected to be about 3.9% in the third quarter. That being said, 3.9% for the third quarter is still a very solid number. So, and we believe that is certainly very achievable, especially since the bar for that number, it started earlier a few months ago at higher levels and has come down to 3.9%. So that bar seems pretty reasonable, and investor expectations have been dampened. So we do view it as an achievable number.
Lisa, what is the one thing that the technology investor must look at most closely in 2025?
Well, certainly, again, both the ongoing health of the consumer in terms of demand for products, but more importantly as well, the appetite for CapEx is going to be important. And so, again, looking for that forward guidance that's coming out of these third quarter earnings reports, and also the demand and spend and proclivity for, again, that technology, particularly AI demand, is really going to be key as we look at what's coming out of those guidance numbers.
Lisa Erickson, Head of Public Markets Group at US Bank. Really great to have you on the program. Thank you very much. Let's take a quick look at shares of Apple, which touched an intraday record high in the session. Actually, earlier this morning, Apple unveiled a new iPad mini that it hopes will attract consumers to its early generative AI offerings. The tablet has an 8.3-inch screen and Apple's A17 Pro chip to power Apple Intelligence, which is due for release later this month. The new iPad mini costs $499 for the Wi-Fi model and $649 for the version that has a cellular connection. It goes on sale October 23rd. Now, coming up on the program, too good to be true, a major reveal on the human touch that helped Tesla's Optimus robots appear to come to life. More on my reporting about that in just a little bit. Let's go back to ASML. This is a big story. The shares in Europe are now down 12.6%, which I make the biggest drop intraday since 2002. Very simple. They only booked half the orders in the quarter that analysts were expecting, but they also lowered guidance for fiscal 25. They lowered the range of gross bookings, and as Ian King of Bloomberg News explained, this is a leading indicator. This is a chip equipment maker, the machines that make the chips, and it tells us looking forward that this is a sector that might be bracing for things to cool off. We will continue to track this story given the severity of that decline. ASML down 12.5%. This is Bloomberg Technology. Okay, it's time for Talking Tech, and first up, Ericsson shares soar after announcing third quarter earnings that beat analysts' expectations. The company also announced a 55% sales growth across North America. The strength thanks in part to a major partnership with AT&T. Plus, IBM is looking into misconduct allegations facing a top executive in China. A letter online accuses chairman Chen Zudong of accepting vouchers from external partners and violating the company's expense policies. IBM confirmed the letter is authentic. When reached by Bloomberg News, Chen declined to comment. And Warner Brothers Discovery's Max is planning a major debut across new Asian markets. It comes as competitors like Disney and Amazon are scaling back investment in the region. Max recently launched in Japan through a partnership with a local streaming platform and plans to launch in Australia in the first half of next year. Now, Bloomberg's learned that humans were remotely controlling some of Tesla's Optimus robot prototypes at its recent showcase. Elon Musk told the crowd the humanoid androids would be, quote, the biggest product ever, but he did not disclose that they had human helpers on the night. The event was intended to generate investor buzz for upcoming products, but principally a robo-taxi. Bloomberg's Max Chafkin of Business Week and Elon Inc. joins me now. And what we reported in the story, Max, yesterday, what sources told me, is that this was kind of classic Elon. 3 weeks before the event, he went to the team, the Optimus team, and said, I want Optimus at the event. And they said, well, we don't have time to get the software ready. Teleoperation is our only option here. And now we know teleoperation was what was happening.
Yeah, I mean, it does undercut some of the impact of the event, looking at the way people reacted to it. The Optimus robots, I would say, was sort of the biggest surprise, the thing that seemed to, excite the investors and attendees the most. And as you say, Ed, the fact that they were using teleoperation, essentially remote control, it really makes it clear that although there may be some mechanical breakthroughs here, it's not clear how far Tesla's really come on AI, which if you remember, is the whole purpose of this whole thing.
You raise an important point, which was going into this, because we reported intensely about it, the focus was robotaxi. And on Friday, the morning after the event, the stock fell 10%, in large part, I think, because there was a lack of detail about a future proprietary ride-hailing app. Would you share that assessment?
Yeah, I mean, I think the problem here is that the robotaxi story is still very much a story, and nothing about the event kind of went against that. The event was held on a soundstage. I mean, you're talking about the teleoperation of these Optimus robots, but you could make a similar critique about the cars that were unveiled, right? They're running on a closed course, a handful of stops, custom software. Not totally clear that the cars themselves were running exclusively on AI either. So again, you have Elon Musk selling a vision of the future, but not necessarily showing a ton of progress in the present.
Elon Musk is often late, but as you know, across many of his companies, he often does get there in the end. And that's kind of the sentiment that's been shared. So what do we think will happen with a robo-taxi and an Optimus bot?
Well,
and a proprietary ride-hailing app? Go for it.
I mean, as you say, Elon Musk is often late, and he has achieved a lot. This is one area where he has not achieved as much as he said. He's been promising robo-taxis essentially next year for years. And we saw him do it again, in 2026, 2027. You could kind of hear in his voice during the event a lot of uncertainty about when exactly this would happen. And the problem is that, or it's both a problem and an opportunity, Musk has clearly sort of swerve the company into this direction, saying that this is essentially the future of everything. It's such a big market. So I think investors are likely to give him a lot of leeway here, because of course it's a big opportunity and it's right. Elon Musk, as you say, but nothing should be taken for granted.
Bloomberg's Max Chafkin of Elon Inc. and Business Week, thank you very much. So coming up here on Bloomberg Technology, Dell is set to start shipping out servers with the newest Nvidia chips. We're going to speak with Arthur Lewis, president of Dell Infrastructure Solution Group, next. This is Bloomberg Technology. All right, Nvidia's rollout of its next-gen AI Blackwell chips begins with Dell. The largest seller of servers says they're ready to begin shipping out devices with the chip next month, a sign that production of Blackwell is back on schedule. We're joined now by Arthur Lewis, president of Dell Infrastructure Solutions Group, and much has been reported and made about Blackwell, a delay or no delay. I guess the starting point is to ask you, Arthur, if this was a surprise to you, that you were able to adjust or pivot and then ship next month unexpectedly?
Ed, first, it's great to be back, and thank you for having us on your show. No, not unexpected at all. We've been working on this very, very hard. If you think about, the innovation that we've been delivering, from, the start of the 9680 to, what we announced at Dell Technologies World from, rack scale infrastructure, we talked about the fact that the Grace Blackwell product was, on the roadmap and, would be hitting for customer testing in the second half of this year, with general availability coming next year. So we're just following through on the commitment that we made back at the beginning of this year.
So the last 3 months of the year, calendar year, are going to look a lot better for Dell now, aren't they?
Yeah, we have some really exciting products. You know, customers are facing density and power constraints in terms of these large, rack infrastructure. And so we have three, significant product announcements that we had today at OCP. Number one is the XE9712, which is the, Grace Blackwell 72 NVL Inc. Form factor. This product, air-cooled, is 25 times more efficient than the H100s. But in addition to that, we're bringing density to compute. We also announced a Turin-based AMD system, all direct to chip liquid cooled, that does two amazing things. Number one, it solves the density problem by providing 27,000 cores per rack. And secondly, it's highly performant, up to 60 times faster than the previous generation.
The industry-wide, are not making margin on this. Are you going to make margin on this? And if so, how?
Yeah, so I think, we showed that we were able to make margin in Q2, achieving 11% operating income for the overall ISG business. Our job is to remove the shroud of complexity and mystery around generative AI and deliver value to customers. And we will be rewarded for that value in the Tier 2 CSP space, as well as in the enterprise space, where we have even more opportunity to attach more of our service and storage offerings and networking offerings.
It was interesting what you were talking about there on the air cooling side. Everyone keeps asking me about liquid cooling. What is the Dell position on liquid cooling? It's because with Blackwell, right, you were sampling the technology before you shipped it, and you must have thought a little bit about a pivot to liquid cooling, perhaps.
We've been talking about liquid cooling since the beginning. We have air cooling, liquid assisted cooling, rear door heat exchangers, heat capture cabinets, and direct to chip liquid cooling. Once you get into the 1,000 watt TDP range, this is where direct to chip liquid cooling is absolutely mandatory. But we have a wide variety of offerings that span the air cooling, the liquid assisted air cooling, the heat capture cabinet, the rear door heat exchangers, as well as the direct to chip liquid cooling. Not all environments are ready to support liquid cooling, but our portfolio is comprehensive and broad and supports all of the requirements that customers have to deliver the most dense and energy efficient infrastructure in the market.
Arthur, before we let you go, give us insight into the reality of Blackwell volumes. This is small, right? Or is there some actual scale here to production?
Look, our volumes is contemplated in the guidance that we provided at the end of Q2. If we have any update to that guidance, we'll update that in Q3. But, we're very excited about the amount of innovation that's being driven in this space. If you think about, where we were at the beginning of the year, we were talking about rack infrastructure with 64 and 72 GPUs. Now we're up to 96 and 128 GPUs, and we're talking about, scalable systems. I mean, think about this, Ed, 768 GPUs interwoven to operate as one system with integrated networking for maximum throughput. It's just amazing what we're seeing.
Arthur Lewis of Dell Infrastructure Solutions Group. It's really great to have you back on the program. Thank you. That does it for this edition of Bloomberg Technology. Stay tuned for special coverage ahead of an exclusive interview between former President Trump and Bloomberg editor-in-chief John Micklethwait. This is Bloomberg.